Welcome, friends. Today we'll discuss the valuation parameters. Up to now, in this financial ratio analysis, we have seen profitability ratio, then leverage ratio, and operating ratio. Today is turn of valuation ratio. So, what is this? Valuation ratio is ratio comparison of any particular company with respect to other parameters. In last leg, we'll discuss how company is valued, overvalued, or undervalued with respect to its intrinsic capacity, intrinsic health, whether valuation is fair or with respect to price or no. So we'll see three parameters here. First one is price to sales, second is price to book value, and third is price to earnings. So all three places will analyze price with respect to sales, with respect to book value, and with respect to its earnings. So first one, we'll see price to sales ratio. So how we can calculate price to sales ratio of a company? This is simple formula. Current share price divided by sales per share. Price to sales. So simple. Now question is from where we can get sales per share. It is also quite easy. From annual report, you can get total revenue or total sales value, and you will get also total number of shares. If total revenue is divided by total number of shares, we can get sales per share. Now, we can divide current share price by sales per share. We will get price to sales ratio. And this will give how price is with respect to sales, whether price with respect to sales is two times, four times, how many times people is ready to pay. If company is good, its sales are good, then people will definitely pay more price and its valuation will be rich. If company is not able to sell, its price will fall down and of course people will not give the price equal to sales. Because sales is very meager and it may be below one. Now, second thing, price to book value. First of all, what is book value? The book value is value written in books of accounts of a particular company and how they arrive at this book value. So company have total equity share or share capital and reserves. If we will put together, we get one value, total value of a company. And if we divide this value by total number of shares, we get book value of that particular stock or particular company. By this formula, we can get price to book value ratio. It is normally from 1, maybe below 1 also, and up to 4 it ranges. In a special cases, if company is very good, it may be more, but normally between 1 to 4, maybe 8, 9 also. If people ready to pay price, being company having very good health, very good sales, revenue stream very good, everything good, maybe people will pay more, so price will be more. Now, third thing is price to earning ratio. And price to earning ratio can be calculated by price of a share divided by earning per share. Now, question will come from where we will get earning per share. It is quite simple. In annual report, you will get PAT and PAT profit after tax value, or we can say total profit And if we'll divide by total number of shares, we will get EPS, earning per share. From here, we can calculate the price of a share. Of course, we can get from any website, any place, or annual report also. Better to current price we will get from website like a screener, money control, trading view, or any broker's website also we will get current price. So this price divided by earning per share, from that we can get PE multiple P ratio. So these three are important parameters. Based on that, we can get valuation of a company and we can decide whether to go ahead with this investment or no. So we can see here Amar Raja battery price to book value 1.98. So what it gives? It gives that for value of book value of 1, price is 1.98 and people is ready to pay this extra price because Amar Raja it is a good company. Second thing, price to sales 0.98 almost equal. If people is paying equal to the sales value, if sales is 1, price is 0.98. Now another thing, price to earnings PE 15.1. So for every 1 rupees of earning, price is 15 rupees. So it is good. If we will see with these parameters, with competitors, how the competitors is behaving, we can see here P of other company to investment was all this. You can see this Amar Raja is lowest side. So from here we get that Amar Raja is now fairly valued or undervalued with respect to others. We can get comparison of all other parameters with respect to competitors and can get good idea whether to invest or no. We can decide accordingly. Now, one another thing is index. So, how is index? The index valuation, and we can get historical index valuation, and based on that, we can infer something important. So, we can see this historical PE. We can see lower side it is around 11 and maximum around it is 28 below 30. Historically it moved only one time. They moved in 2020 up to 42. Actually on 8th February it went to 42, 8th February 2021, and there it fall down, started to fall down, not able to sustain this much high valuation of Nifty 50. Historically, we can see this 10-year back 18.5, this mean below up, this moves revolves around that. If you find Nifty 50p below 16, it is good time to invest. If it is between 16 to 20, it is fairly valued. We can also invest there, but we have to little bit careful. If it is good beyond 20 to 25, we have to extra cautious and check other parameters of company, and from there we can decide whether to invest or no. Whether I have shared or no or didn't share. Sorry, let us. So here we can see P ratio of Nifty 50, and we can see this 18.5 is mean P. If you find P below 16, then it is good time to invest in any stock. If it is between 16 to 20, okay, we can also invest, but we have to little careful. If beyond 20 to 25, we have to extra careful and check all other parameters. If it is justifying, then we should invest. If it is going beyond 25, we should not invest. 20 to 30, we should wait to correct. We can see here this maximum low, it is 11, it went, and upside it is up to 28. So we can see 11 to 30, it revolves. Only one time it went to this 42. Actually, on 8th February, it went to 8th February 2021 to 42 and then started to fall down, not able to sustain this much high. So this is the overall PE situation for a Nifty 50 and we can have inference whether to invest in a stock or no. Now question is how to get this historical value of this. For that we will go to this NSE website and from there we can get WW1SNSE we get here. Product indices, then we can see historical value, EPB share. Okay. So 1 year data we can retrieve at one time and we can see here P value, PB value and dividend yield. Of course, this PE and PB important for us. So now market is around 21. So we can even now invest PB around 4 or so. With full year almost same range, not moving much. We can go downside and see around this one only. So 23.42 we can see here this much. Now we should see this historical value, how we can get. Of course, we will go there. So we will change this date to 21. This again 21 and this will make December up to 30 and then submit. January. Oh, yes, sorry. Now we can see this P little bit in upper range and go down, increasing P. Yes, we can see 40 now. It is upper side. Yes, 8 February 2022, 21. This 42. And if we see backward, also not there. And here, this much. So maximum it touched 42 and then it started to go down. Well, of course, this book value is in same range, maximum range. So we can see here this inference. Now let us see some more example from our this company. In fee, we can see here price to book value is 8.58. So what this gives information? This gives that for book value of 1 rupees, people is ready to pay price of 8.58. around 8.5 times more. Price to sales again 4.48 for every unit. One sale price is 4.48, almost 4.5 times. So people is ready to pay that much. Again, P 26.8. So because this is a good company, so this valuation parameters are like that only. We go to one bad company, Suzlon as usual, we'll go there and we can see here P nothing because everything negative in that. Again, book value nothing. Yes, of course, price to sales 1.55 because now company started to move little bit. So we can see here other things are negative. So clearly this shows if there is no P, no book value, we should avoid such company. So now we will have fair amount of idea how we can check valuation of a company and check valuation of a index and how we can have influence whether to go ahead with investment or we should wait. This is from today. If you find some value, please do share with your friends and colleagues so that they can also have benefited. Thank you. Bye bye.